Hello YouTube family, welcome to another video. And in today's video I'm going to look into two companies that I think are making big turnarounds. These two companies were hit heavily by the pandemic. Revenues and profit fell significantly, but now that the pandemic is coming to an end, we're looking to see if the companies are undervalued. So if you haven't subscribed to my channel, hit that big red button and like and share this video. So number one on my list today is Knutsford Express. And Knutsford Express is a company that's in the luxury bus charter service, and they have a courier business also. No, they also do airport transfer, group transfer, private transfer, and those type of business, car rental. No, in 2020, when the pandemic first came around, the company was severely affected by the pandemic because we were in a lockdown and traveling was basically halted. So revenues fell from 1,146 to 1,021,000,000. Net profit also fell significantly by 82%. Now, if we look back in the past, prior to the pandemic, Knutsford Express was a company that had a compound annual growth rate of around 22%. That's from 2015 to 2019. So the company is one that normally it steadily grows over time. You know that when the pandemic came around, traveling was basically out. So the company basically had no choice but to just sit by and watch. Now, fast forward to 2022, and we can see where the company has begun to make a recovery. Profits for the last financial year was $72 million, coming from a loss of $95 million in 2021, because the company was still suffering in 2021 as the pandemic was still in effect and we were in lockdown for extended period of time. So from 2020 to 2022, the company has been affected severely. But now that the pandemic has subsided, I expect that the company revenue and earnings should grow and recover to at least the previous levels. No, if the company is able to grow at a pace it was growing at the past and is able to recover its lost earnings potential, its company could be a potential buy. But for now, this is a company that will be on my watch list. So based on my projection, if the company could have net profits of around 300 million, the company could, in a sense, the company basically would have a projected PE ratio of 13 times. Now the company is basically trading at 26 times at the moment. But I expect that if the company has a good recovery, their projected PE ratio should drop. But it's not a guarantee because things have changed over the last 2 years. So maybe their recovery is not as good as what we expect. So it's still a company that will be on my watch list. Now, number 2 today is NCB Financial Group. No, banks were one of set of companies that were severely affected by the pandemic. Also, NCB is a company that has always been growing at a good rate over the years. But during the pandemic, profit fell significantly. And NCB, has about 6 to 8 different subsidiaries. They have the consumer banking side, payment services, corporate and commercial banking, and they have wealth and asset management and life insurance. They own 60% in Guardian Life and General Insurance. And NCB is a company that we know that is the most profitable company in Jamaica. But last year their profits fell significantly. Now, if we look at last year earnings, the company earnings fell to $20 billion, all the way from its record in 2019 of $31 billion. And it's a company that I expect to surpass its 2019 record based on the last 2 quarters. So if we look at the last 2 quarters, the company has managed to hit a new record, quarters. So in quarter 2, the company made $9 billion, $9.9 billion. And in quarter 3, they made somewhere around $10 billion also. So as you can see, if you can look at the previous 5 years, you would notice that the company has hit their 2 best quarters in the last 2 quarters. So what that would mean that if they continue on this projected path, this will be a record year. And at this moment, the company stock is trading at $90 per share, coming all the way from $200 in 2019. So I expect NCB to be a strong, it's a strong buy for me at the moment. As currently NCB is a company that has 41% of the commercial loan market in Jamaica. The nearest company to NCB at this moment is Scotiabank with 19%. So the company is still growing its balance sheet, still growing its loan portfolio, and it has the largest asset base in Jamaica as a bank, around 38% of the total commercial bank space. So NCB is a company that I expect to significantly increase over the next year. So based on my projection, if this company can produce at least $33 billion in earnings, we will have a projected PE ratio of 6.42. Now, I will go in 2 more videos to give a more detailed analysis of these 2 companies. But based on what I am seeing, NCB would be a strong buy for me at the moment, because at $33 billion, that would mean that the company would have to make about $8 billion for this quarter, and we can see that the 2 previous quarters the company has already made that, and the last quarter is normally a quarter that everyone goes hard. So this is a company that I expect to do well. So stay tuned. I'm going to do a more detailed analysis of these companies when the company audited financial is dropped in November. I will cover the company. And regarding Knutsford Express, they should have a quarterly report being dropped within the next 2 weeks. So I will have to go over that company back. But for me, Knutsford Express is a watch and NCB is a buy. So I am not a licensed financial advisor, but in my opinion, this is a strong buy. So stay tuned as we do more of these videos and look into more companies.